The United Kingdom has officially sealed its divorce with the European Union. The Leave campaign securing around 51.8% of the vote, while England voted overwhelmingly for Brexit. But Scotland and Northern Ireland, in fact, backed Remain. This even as London too backed Remain, but the turnout, in fact, was lower than expected. Meanwhile, the British Prime Minister has already announced that he would be stepping down in the next 3 months, and a new Prime Minister will come to power in October.
Have all had their say. We should be proud of the fact the British people have voted to leave the European Union, and their will must be respected. I want to thank everyone who took part in the campaign on my side of the argument, including all those who put aside party differences to speak in what they believed was the national interest. And let me congratulate all those who took part in the Leave campaign for the spirited and passionate case that they made. The will of the British people is an instruction that must be delivered. It was not a decision that was taken lightly, not least because so many things were said by so many different organisations about the significance of this decision. So there can be no doubt about the result. Across the world, people have been watching the choice that Britain has made. I would reassure those markets and investors that Britain's economy is fundamentally strong. And I would also reassure Brits living in European countries and European citizens living here that there will be no immediate changes in your circumstances. There will be no initial change in the way our people can travel, in the way our goods can move, or the way our services can be sold. We must now prepare for a negotiation with the European Union. This will need to involve the full engagement of the Scottish, Welsh and Northern Ireland governments to ensure that the interests of all parts of our United Kingdom are protected and advanced. But in my view, we should aim to have a new Prime Minister in place by the start of the Conservative Party conference in October. A negotiation with the European Union will need to begin under a new Prime Minister. And I think it's right that this new Prime Minister takes the decision about when to trigger Article 50 and start the formal and legal process of leaving the EU. I will attend the European Council next week to explain the decision the British people have taken and my own decision. The British people have made a choice. That not only needs to be respected, but those on the losing side of the argument, myself included, should help to make it work.
There are 17 million people that voted for Brexit. It's a victory for ordinary people, decent people. It's a victory against the big merchant banks, against the big businesses and against big politics. And I'm proud of everybody that had the courage, in the face of all the threats, everything they were told, they had the guts to stand up and do the right thing.
The total number of votes cast in favour of Remain was 16,141,241. The total number of votes cast in favour of Leave was 17,410,742. This means that the UK has voted to leave the European Union.
Okay, now let's get in a quick word now. We have stock analyst Hemant Kabadia. We also have Kumar Jain joining us now. Mr. Hemant Kabadia, thanks so much for speaking to us. Now, despite the reassurances coming in from the finance minister that there is enough liquidity to, deal with this kind of volatility that we're seeing on the markets, and also from the RBI governor himself coming out and stating that they are prepared for any eventuality, we are seeing the Sensex and the Nifty trading in the red. Can you tell us a little bit more as to, how really can we see things moving on from now on?
I think what we're seeing now is more of a knee-jerk reaction, and somewhere, I wouldn't say I'm towing the line, but the official statement by the finance minister, I think, makes sense. Forex reserves are almost at an all-time high. Current account deficit is under control. Inflation is down. And I think the FCNR outflows have been factored in by Dr. Rajan. We have got the highest FDI investments last year. We are seeing green shoots in the economy. So things are looking up, and with something like GST on the anvil, which could add to the GDP, I guess it would take some time, but yes, I think one cannot ignore the dangers of a fluctuating currency. That would take some time to pan out. I think there would be a gold is up, which is already clear. Dollar assets would get invested in. Dollar would get stronger, the euro and the pound would get weaker, and yes, that would impact the rupee also. So barring the currency volatility, which is very significant, I guess things are not so bad, and we should be seeing sanity prevail in a couple of days, but we should be seeing some stability even in the developed markets.
Absolutely, and Kumarji, that's exactly what India has been doing, hasn't they? You know, they've been keenly watching the developments happening in the United Kingdom, and they've also been reassuring that there's absolutely nothing to panic. So do you also agree with Mr. Hemant Kapadia, this is possibly could be a knee-jerk reaction, and correction
Absolutely.
will follow soon after?
Absolutely. Whatever Hemant Kapadia says is going to be the same effect. Right now also you see, yesterday the gold went to around 29,300 and people were expecting it still to come down. But as soon as the Brexit being announced by today morning, which was around 70 million of the voters have been favored for the from the Europe Union. Soonly the effect was there on the share market, which came down to around 1,000 rupees down. At the same time, which gold has gone up to 31,600 in MCX rate, which was almost a difference of 2,000 rupees in a short of time. I see further also it is if the currency remains the same. I mean, if the pound goes down and other currency of the union also goes down, here the dollar will go very strong and might be in the same effect of the gold. Maybe a gold 1 ounce may go to around 1400, where in Indian rupees the gold will lead to around 32,000 rupees.
Absolutely, but I mean, the United Kingdom has also been the third largest, FDI investor. How would really that impact stocks with the kind of, situation developing now in Britain post-Brexit? Also with the recent announcement made by the government allowing 100% FDI in various sectors.
FDI, as far as the FDI is concerned, I think so. That will be around throughout the world, not from the only Europe unions. So here I see that the policy what Raghuram Rajan was to employ, this the government has done, and here I feel maybe in the period of around 6 months we'll see there is going to be a good flow of the money. As far as India is concerned, maybe somehow the Indian economy may go little good, but whatever the gold things are concerned, here we feel it is going to be a very strong, further maybe 34, 35, or it may exceed to more than that also.
Okay, let me just get in, Mr. Kapadia. Yes, you were just mentioning something there. Please continue.
Yes, I think strangely enough, we could get closer to UK because UK would need us even more than before. I think Korea and India are the two countries which UK would need to align more to sort of make up for the lacuna it would face after the divorce from the European Union. So I have a feeling that trade with UK could be on the rise, then on a decline. So in a way, it would benefit us.
Now, are you then saying that Brexit would in fact work out in favor for India, and that the carnage that we are seeing on the Indian markets is going to be short-lived?
See, I don't think we can isolate ourselves from that point of view, and neither can we change history. Yes, I think companies which are exporting to the EU, one would need to renegotiate, and would also need to see how EU and Britain do the renegotiation. But yes, from some point of view, I think it would be inversely proportional, and I think we would get closer and the trade would increase. But yes, like I said, at the sounding repetitive, I think the currency is going to be a major cause for concern for us, and I think everybody else in general.
All right, just stay with me. We'll just, talk about the impact of that decision that has been made by the United Kingdom there for the student community. What does Brexit now means for them? Loans, in fact, in the United Kingdom to fund their education will become cheaper. And similarly, remittances will also be cheaper. But, the big hurdle is likely to be the visa laws, which will definitely now get more rigid, far more stricter. Let's talk about the trade front. Indian companies are in a spot of bother. Their costs will increase manifold in the short term because they'll also have now to find an alternate base to access EU markets. Funds, in fact, from the United Kingdom will also move out of India, and the volatility in pound will now hit exporters. Let's talk about the markets now. Well, they have reacted quite sharply to the Brexit vote, with the Sensex tanking by 1,000 points when the result was announced. Foreign funds will move out of India, and also to ensure that the economy isn't hit hard is to ensure adequate forex reserves. Speaking of tourism now in the United Kingdom, that might just get cheaper with the fall in the value of pound. Rigid visa laws, however, could affect Indian tourists, and promotion of tourism is expected to boost the pound further. Getting in Hemant Kapadia here, but Hemant, what can we now expect in the next few weeks, till this matter settles in and till people also absorb the decision that has been taken by the voters in Britain, and how really would it impact Indian businesses, who have been working there?
Indian businesses working there would obviously have the first disadvantage of you had a unified Europe, but would have to look for ways and means in terms of supplying goods and services. And many of London is a global financial center. I think that would get impacted. Loss of jobs, yes, Indians are over there. Morgan Stanley, JP Morgan, all of them have bases in London, and they would all shift to somewhere in Europe, not completely but partially. That would take its toll. And strangely enough, the ECB doesn't have too much of ammunition to combat and save the euro. Now they already spent billions of dollars in buying a bond. So from that point of view, the pressure on the currency is going to be crucial, and it's going to be killing. And from our point of view, yes, I think needless to say, there is going to be an impact. There is no denying the fact. I think US will now go slightly further slow on raising interest rates over there. So, I think commodity prices could come under pressure. There would be a decline in terms of demand. So it's going to be a multi-prong effect. I'm not sure if one would have a simple yes and no answer to how things would pan out. We would have to wait for some time, let for the debris to settle, let the dust to settle, and see how things stabilize. But like I said, it doesn't look as bad. There is no denying that it is going to have a very significant impact, but one gets the feeling that looking at how we are and where we are poised, and like I said, a reform like GST on the anvil, I think we should be relatively unscathed. I'm not saying that we're going to be completely insulated, but we should be relatively unscathed compared to the rest of the market.
Absolutely. But Mr. Jain, don't you think that leaving EU would also create considerable uncertainty for Indian business in engaging with the United Kingdom? And it could definitely have, far-reaching consequences. Of course, the Finance Minister and the Reserve Bank of India governor have said that there is sufficient liquidity in the domestic market. But, can you just explain it to us that, how really are we expected to get affected by this decision that has been taken? Or do you think that this is just, a reaction to the global markets and things will settle down, as Mr. Kapadia was also mentioning?
First of all, let me explain you that there are altogether 800 companies are there working with this union. So we had a place to enter this entire 28 countries through England only itself. Now that once the pound difference which has come down, there is going to be definitely a big effect on that currency. What we were exporting, the payment was made in pound, and that will affect directly the price will definitely will differ. And the way which was through our England, now that has been going to be stopped. So we will have to approach all these other 27 countries in different ways. They'll have a different currencies, and that will impact directly to the Indian economy. There will have there will be a big difference of the payment, like mode of payment, or the whatever we pay them or whatever we get them will be very difficult for us to also get it back. So here I feel those all 800 companies, either they'll be shifting to different companies, or they have to come back. And at the same time, the workers from which we have sent it to the India, they will also have an impact on that. So here I feel this all 800 companies will have a very bad effect of this Brexit.
Absolutely. Okay, we'll just have to wait and watch out for things to pan in the next few days. For now, Mr. Jain and Mr. Kapadia, thanks so much for joining us. But as Britain exits from the European Union, the British currency is bleeding to its lowest in 31 years. In early trade, the great British pound has plunged 9% against the dollar. Indications of a Brexit jolted European markets, but it was the sterling pound that was the heaviest casualty. While volatility continued to dominate global markets, fears did reflect most on the pound, on the currency. Thousands of Britons, in fact, were seen lining up to forex agencies in a bid to sell their pounds against the dollar to contain that loss. Okay, so those were visuals coming in there from London, but jitters are being felt across the global markets. The Indian markets, they're opening in the red and continuing its downward slide. But we spoke to two stock analysts who did say that this is possibly just a knee-jerk reaction and things would settle in time. Benchmark indices, Sensex and Nifty plunging 3% with almost all stocks trading in the red. Even the rupee plummeted 89 paise in early trade. India's Economic Affairs Secretary has said India is capable of absorbing the ripples of Brexit.
RBI is watching the various markets, and obviously there will be some volatility as a result of this decision in the United Kingdom. But we are looking at the markets and ready to intervene if we see that they become disorderly. But we are not going to prevent any market adjustment, but we are ready with ammunition if necessary. I don't think immediately there will be a significant adjustment, because remember, there's a 2-year period over which the exit is negotiated. So immediately nothing's affected. What it does get affected is investment into the UK, to the extent that people see that the ease of entry into the European Union is more difficult. So those are reasons why you might see over time some frictions develop. But immediately I don't think there would be a dramatic effect on trade. Well, I think immediately what central banks can do is, if there is any area of liquidity tightness, they can inject appropriate amounts of liquidity there. So I think all the central banks are going to be prepared to do that.